If you don't know him, then you're not in the right circles, but now you do. Vinay Mohan from ConsenSys. Where's Vinay? Come on, Vinay, come on down. So ConsenSys, if you don't know ConsenSys is a venture development studio founded by Joseph Lubin. Joseph Lubin was one of the early creators of the Ethereum network. And ConsenSys pretty much has its hands in just about everything, from working with regulators and governments, to startups, to enterprises and institutions, to foundations, to nonprofits. It's a good company. We respect them quite a bit. I think, correct me if I'm wrong, probably the largest blockchain company in the world. What are we, 600 people now?
1,000.
1,000 people, right? Literally 1,000 people in a company that when we first met with Joseph Lubin back in 2013 was like 15 people. So it's been an awesome meteoric rise. So a big round of applause for Vinay. Are you all set?
Almost there.
Almost set. All right, so again, in the same thing with Mike, think about the questions, right? So this is a guy that we actually want to throw down with because he's going to have some good answers. And the countdown begins. 3, 2, 1. Vinay.
Right. Thank you for that, Zach. Ladies and gentlemen, sorry I can't give you a song like Zach did. I'm happy to sing for you a little later, but I hope
how about a dance?
This is good enough.
A dance.
If you join me, yeah. Maybe once the questions start. Thank you, first of all, to the organizers of BFC Asia Pacific. Thank you, Dean, for your patience over the last 8 months. It's been a journey for all of us who are presenting at this conference. Really appreciate the opportunity. My name is Vinay. I'm from a company called ConsenSys. Thank you for the introduction again. And I'd like to talk to you a little bit about forecasting a future. My topic of this presentation was forecasting the future, and I've deliberately changed it because I don't think any one person or company or part of this growing community can forecast the future. So I'd like to give you a glimpse into what blockchain might possibly bring in the future and what that might mean for financial services. Quick show of hands, how many of you represent FIs, banks, payment networks? Right, and how many of you are technology providers of some sort who work with banks and capital markets institutions? Thank you. Great. So let's talk about the genesis of financial services. This is the culmination of many centuries of civilizational effort. And today what we have is a organized system across the world where across pre-trade, trade, and post-trade, or depending on which side of the table you are, across origination, assessment, and operation of a loan or a payment transaction or an account, financial services are pretty much the bellwether of every single country, every single economy around the world. And FS has traditionally evolved as the central layer, providing a process-oriented approach to fulfilling a transaction, wrapped around with services and infrastructure. And infrastructure could be IT infrastructure, it could be physical infrastructure, it could be third-party solutions, and so on. So in this rather generic world of financial services, I think the question that we have to ask ourselves today is, in terms of readiness for the next 10, 15, 20, 100 years, is the financial services industry ready? And when I say ready, I'm not questioning things like margin pressure or compliance or why you can't get something activated in your country. I'm talking about something which is systemic, something which can affect the industry, something which affects our perception of financial services as a whole. And a few reasons why we should be thinking about this. We are steadily moving towards a technology confluent world. We're talking about this thing called Web3. We're talking about the evolution of the internet. We're talking about IoT, machine learning, robotics, how humans are going to lose their jobs. We're talking about a change in social and business constructs fundamentally. Is the FS industry ready for that? For all its goodness, for all its effectiveness, we live in a world where there is tremendous financial exclusivity. There is a lot of income inequality in the world today. A lot of that has to be ultimately attributed to the way we have evolved financial markets, to the way we've evolved these systems that underpin our economies. Will that change in the future? The changing perception of wealth and value. 500 years ago, the only way you could measure an individual's value is probably the plot of land that they had, or the number of coins they had stashed away in a box. Today, you have a central bank issued promissory note which determines how wealthy you are. Can the financial service industry, and are you, as real-time practitioners, taking into account that wealth and value might potentially not be the same as we perceive them today? Right? We're going to talk about tokens in a while, and tokens are a great example of how you can perceive value in lots of different ways. It's not just about fiat money. It's not just about paper-backed currency. In a world where people are increasingly willing to share and give up ownership, right? How does it affect all of us as participants in a financial services economy? And finally, this notion of engineered complexity versus failure tolerance. And what I mean by that is, for better or worse, financial services have evolved with a lot of complexity layered upon them. There's a lot of patchwork that's gone into making it what it is today. It has been important. Managing other people's money is no joke. It needs discipline. But this complexity has largely been by consequence and not by design. So we live in a spider-webbed world of APIs and platforms and central and semi-central and distributed infrastructure that's not often by design, and it's not often in our control. So the question is, are we building financial services of the future on a sustainable fabric? That's the key question to why blockchain. Is the world of today sustainable? Can we survive another crisis? 1, 2, 3, how many more can we go on with without completely losing visibility of where the industry is moving? So these are some questions that I would pose quite openly. It's not to suggest in any way that I'm not a maximalist by any means. I'm not trying to say here that all of this is going to be disrupted. You're all losing your jobs. But these are some questions to think about. These are some big picture questions to think about. And the reason we have to think about it is we are fundamentally moving, not just as an industry, not just as a country or a people, but globally as a civilization. Right? Human beings have been moving. We're evolving. And we've now seen over the last 15 years how worldwide, we've moved from a platform economy where we depend on central platforms to a sharing economy, the world of Ubers, the world of Airbnbs, the world of us coming together, willing to share, putting our trust in smaller players, quite unorthodox in their ways. We're also seeing the gradual evolution of this into the peer-to-peer economy. So the question is, why can't I be fully empowered to act and to use my resources without having to go to any other third party? This is not a challenge to just financial services. This is affecting every sphere of human endeavor. This is happening in healthcare. This is happening in supply chain and transportation. This is a global phenomenon, and this is something that we have to keep in view, because our true north, at least for those of us in the world of practicing and building blockchain systems, our true north is largely about decentralization. It's not so much about blockchain. It is about the larger vision of where this is all going. So enter blockchain, and I sort of superimpose that same old, nicely wrapped up financial services world of pre-trade, post-trade settlement services infrastructure. What did blockchain do for us? What is it bringing to the world? And think about this not just as what blockchain does today, but also possibilities for the future. So this is really my prediction slide for you. If you'd like to take away one thing, I want to talk about this particular slide, because this is really what blockchain brings to us. Bitcoin proved that you could bypass a central bank and transfer money to your friend in a different part of the world with just a phone. Right? It proved that you can now have peer-to-peer commerce. So to my earlier point about us moving to a peer-to-peer economy, blockchain provides the start of that fabric. Because you're now working on a decentralized ledger or a distributed ledger, and because you're now all seeing, or you're all equal participants on that ledger, blockchain provides this great value of one source of truth. Those of you in the industry or in the business of providing reconciliation services, you need to be slightly worried about this. With the ability to trust a shared network, and with all of us having access to the same data at all points in time, there's a lot of friction in the system that can be eliminated. There's an expression we use in the blockchain fraternity. It's called the trade is the settlement. And Bitcoin and Ether and other cryptocurrencies have shown this time and again how atomic settlement is a reality. When you have computing power confirming transactions for you on a global scale. And when you send money from person A to person B, Bitcoin fundamentally solved something very important called the double spend problem. I cannot send the same one Bitcoin which I've sent to person A to person B. There's no way I can do that. There's no arbitrage. There's no time gap in between where that might be possible. And so we live in a world where increasingly the trade is becoming the settlement. But the most important sort of thing that I want to talk about here, we have, with blockchains, learned how to virtualize value, right? Value previously used to be fiat money. It used to be sovereign-issued currency. It used to be government-backed, digital money even. But now, with the advent of tokens, we're learning to virtualize the value of just about everything. I can virtualize a house. I can virtualize a car. I can virtualize a painting. There's a lot of different things which count as assets, which we can now virtualize and trade as secondary asset classes. Again, something to keep in view, because this is important from the purpose of challenging the future of financial services. Are you going to sustain the same sort of products? Are you going to continue to sort of hold together in the same kind of fabric that you have for the last 500 years? Unlocking borderless frozen capital, there is no local Bitcoin and international Bitcoin. There is no domestic versus cross-border cryptocurrency payment. There are no borders. One Bitcoin breaks down into 10 to the power of -8. A billion people can share one unit. How many people can share a Singapore dollar? How much can you contribute to a global cause? More than, less than a cent. So unlocking frozen capital is something that we're seeing in the world of blockchains. Borderlessness, and I'll show an example of this, is also something which is becoming quite evident. And lastly, all of this is leading to what I would call the rise of low-friction, end-sided marketplaces. End-sided marketplaces are exciting because they allow completely different industries to connect over a common platform where transactions are seamless, they are fast, not necessarily scalable today, but certainly working towards that in the future. And also in a world where, because you don't have this dependency on trust, because trust can fundamentally be reassigned, if not minimized or if not completely eliminated, it opens up a lot of new opportunities. It opens up a lot of opportunities which were held back because of friction, because we did not have the time, because we did not have the wherewithal to get things done on time. So this is a really broad view of what blockchain has brought to the table and what it will continue to do in the world of financial services to come. So here are some examples that I want to spend some time on, and this is to give you a live view of what ConsenSys is working on, and these are all examples that are relevant to the financial services space. I broadly classify this into 3 areas. The first is what I would call token economic infrastructure and services. It is going to be very hard to speak about financial services and blockchain without talking about a world of tokens. Now, you may or may not want to believe in that, but the truth is we are heading towards a world where people increasingly find value to be perceived in different ways. We have MUFG coins today. I can exchange an MUFG coin potentially for a cup of coffee. I can then exchange that cup of coffee coin for something else. So we live in a world, or we are heading towards a world where tokens are going to be a reality. And when they do, the question is, do we have the same rigor and the same discipline that traditional financial institutions brought over the last 100 years or so in this new token economic world? So ConsenSys is focused on building a number of different products and services for tokens. The first is something called Trustology. This is a product in alpha. It's made a lot of waves right now, but definitely something to watch out for. Trustology is an enterprise-grade custody solution. So when you talk about crypto custody, when you talk about the need to keep your private keys private and the need to keep your tokens secure, and the need for institutions to start entering the world of tokens, if Morgan Stanley or JP Morgan or Goldman Sachs wants to get into the world of tokens, are they going to do it with just a little hardware wallet? Are they going to do it with a piece of paper that has a mnemonic on it? No, they're going to need trustful enterprise-grade solutions, something that they've used for the last five decades or so. So we're very conscious about the fact that you cannot have blockchain adoption become mainstream without giving enterprises the same experience, the same feel, and possibly better security than ever before. AirSwap is a quick example of a decentralized ERC20 cryptocurrency exchange. So the idea that exchanges were traditionally large, singular central agencies. With the disintermediation of that trust, comes the rise of decentralized exchanges, and AirSwap's a great example of that. Token Foundry is a full-scale, end-to-end service for equitable, sustainable token launches. So we provide that as a service. We help design tokens. We help design the token economic, the token economics around that token, help companies that have breakthrough token ideas build, extensive research and white papers, and basically help them manage the token curation life cycle. Also important because of the way we see the financial services space moving. Interestingly, and I think this might be of interest to the buy-side folks in the room, TrueSet is a product we've also started which leverages the decentralization property of data on a blockchain. If you treat blockchain as an evolved data structure where everyone can see the same version of truth, one of the benefits that we're sort of realizing almost immediately is zero to minimal reconciliation. Because you don't have siloed sources of truth, there is no my database versus your database, and we all have the same source of truth. Reconciliation has dropped, and with it, the price of the trust that we pay to companies that reconcile has also dropped. So TrueSet's a great example of how fixed income reference data, as a starting example, fixed income reference data, traditionally guided by ISDA standards, can now be shared by the people exchanging those fixed income securities. And we all become participants in cleansing that data. We all become participants in owning that data. And we save the billions of dollars that we pay to the companies in the middle who basically take all the data from us, clean it up and sell it back to us. So TrueSet's another company to watch out for. Moving on to the other key area, which is fiat-centric payments and settlements, and similar to what Mike was mentioning earlier, ConsenSys was a proud participant in Project Ubin. It was a fantastic opportunity. It changed the world of how central banks looked at blockchain. With Project Ubin and with the amazing work that the MAS did to put all of that code out in open source, we did something called as Project Coca, which was recently delivered for the South African Reserve Bank. Very similar example of ensuring full confidentiality, settlement finality in processing all of a central bank's gross settlements in less than 2 hours every day. We also worked on something called as Project I2I, and I2I was an example of banking for the unbanked. We worked with Union Bank in the Philippines, which wanted to act as a clearinghouse for a number of regional, almost cottage industry banks that had no access to the mainstream banking system. So how can you tokenize money and then share it between a clearinghouse participant and a number of fringe banks in remote locations where normal human access is difficult, and still make transactions as seamless as possible. So there's a lot of different projects there on the fiat-centric space. And as much as we love tokens and we're working towards a token world, we're also building the rails for fiat and token to talk to each other. For those of you traveling to Sibos in Australia later this year, please keep a lookout for this logo. We're building a product called Adara. Adara is a multi-currency, real-time, global payment system that also helps you manage your working capital. The idea that a bank or a network of banks or a central bank or a network of central banks can ultimately tokenize money and then transfer that token of value and then de-tokenize it at the other end can drastically change the global face of payments. So unfortunately, it's still under wraps, so that's as much as I can tell you, but please do keep a lookout for that if you're heading to Australia in October. Here's a great example of what financial services institutions can learn from in terms of creating accessible and transparent funding. We launched something called as Project Bifrost a few weeks ago. And Project Bifrost is an example of saying, how do I get money, how do I get fiat money, not tokens, to someone who's on the Jordanian or Syrian border right now, probably part of the whole refugee exodus, where there's no banks, no ATMs anywhere in the middle. So we've built a solution that basically uses the Ethereum blockchain to transfer traditional fiat value or token value over the Ethereum blockchain using MakerDAO in the middle as a stable coin, and ultimately using the service of a company called Dether, which accepts crypto in lieu of cash. So I can use Project Bifrost to send money to a refugee group in a unbanked, disenfranchised part of the world without traditional financial settlement layers. And that's a great example of how borderless, transparent, accessible funding can be made possible. And by the way, all of these are either heading towards production or already in production. So we've taken some anarchical concepts, which is essentially how blockchain started in the mainstream, and we're now making it acceptable, regulated or regulator-friendly initiatives. The last thing that I want to tell you about is something which I call the data and the governance substrate. Now, across financial services, across different industries, we're going to need better ways of organizing legal contracts, better ways of analyzing data on a blockchain, better ways of understanding how we can scrape value off the blockchain and present them to auditors, to regulators. A great example of that is a company called Balance. Balance is essentially triple entry accounting on the blockchain. Think of QuickBooks, but for crypto companies. So how can you scrape data using the power of the blockchain, present that, use it for your valuation, make token companies that are investing in tokens and buying and selling tokens or using their tokens that they've raised more accountable to the world around them. So Balance is doing some great work over there. We launched a new initiative called Alethio. For those of you who've used Etherscan to understand the world of blockchain, you will know that it's not necessarily a human-readable world. There's a lot of garbled data, a lot of numbers. Alethio is an extremely powerful data visualization layer that can be used by a central bank, by a financial institution, by an end user like myself. Open law, you can't talk about financial services without speaking about the legal side of things. Open law is helping bridge the gap between physical contracts and smart contracts. If I were to draw up a tenancy agreement today, it physically sits on my lawyer's desk and on my landlord's desk. How can I make that a smart contract? How can I actually bridge that gap between code and law? Right? So helping the world of legal and paralegal change one step at a time. And finally, an initiative called Brooklyn Project, which I want to bring up over here because it's important to talk about bridging the world of consumers and regulators. If we have to build this world of token economics in a responsible fashion, we have to do so taking all sides together. And the Brooklyn Project is essentially aimed at building a better world for consumer protection, consumer growth, but also staying aligned with regulatory objectives. So these are some examples of what I wanted to share with you from the world of ConsenSys. And I hope this gives you an idea of where we are looking at financial services and where the industry is going. Now, obviously, a lot of use cases aren't covered. I haven't spoken about the amazing things you can do with trade finance or with decentralized lending or loan syndication, KYC. Now, those I hope will be covered eventually, but this is a partial list. Really quickly, important to talk about some challenges, and most of you know this already. Think of regulatory, enterprise, and technical challenges. Regulators all over the world today have a trilemma. They face this question of, do we prevent, do we permit, or do we promote? Where do we stand? And forward-looking regulators like the MAS are pretty much ahead of the curve. I think they know what they're doing, but there's a lot of regulatory support needed to make blockchain mainstream before we answer, what is blockchain doing for us today? Probably not a lot, and it starts with traditional agencies, it starts with regulators understanding this world better. We possibly need new age regulation, and this is a bold, provocative topic in itself. Can we question the need for the same kind of law in a world of blockchain? Are we looking at blockchain, are we looking at this new world with that 1,000-year-old lens of how traditional institutions were scrutinized? Endpoint governance will continue to be important. It is important to still make sure that the person you're selling to or the person you're trading with is really an individual, not a politically exposed person. So that's definitely a challenge for the regulators. For those of you in the enterprise world, the biggest question that I have today is your enterprise going to remain the same? Or will you become a smaller part of something bigger? Or will you become a cog in a larger wheel? New models, we're finding new models coming up all the time. Blockchain proved quite successfully that you can bring adversarial stakeholders to the table and get them to talk to one another without the need for a central party. We're seeing the rise of consortia. The best use, the best adoption of blockchain is coming from consortium-based applications. Adoption strategy is something that you probably have to think about if you're a CEO of a financial services company. What do you do in the face of a challenger bank that uses nothing more than a phone and a crypto wallet and an offshore in the Philippines somewhere? How do you compete with that, right? Not necessarily a threat right now, but something to think about. I cannot emphasize enough the need for education. We still do not have enough awareness. And the people who are in the know are leaving and joining product startups or ICOs or token launch companies. How do you hold on to talent, and how do financial services companies build using this native talent? Technical challenges, Zach mentioned quite correctly the scalability trilemma. This is something that we are solving on a daily basis. You can have decentralization, scalability, or security, but not all three. But we are finding ways and means to make to push the envelope on all three factors. It's no small feat to try and replace the enterprise-grade IT that financial services have built today. You have some of the best security, some of the best current state technology in the world of FS, and it's very, very hard to try and replace that. So we're painfully aware that if we have to move towards the world of tokens and blockchain, we have to compete, and we have to provide that same sort of service that you enjoyed as enterprises. And with that also comes the big question of how do we integrate the new world with the billions of dollars we've spent in the old world? These are some challenges to think about. None of them are necessarily impossible. But the message that I want to leave with you is if you're building on the blockchain, if you are a financial institution exploring, keep calm and build on. The world is very new. This is still very much the tip of the iceberg. If this was the age of the internet, we're probably in year number 1992. We've got a long way to go. Thank you for listening.
Okay, we got questions. We have the row of microphones in the front, if anybody wants to line up, or I will bring the microphone to you. Come on, this is the largest blockchain company in the world. Let's not be timid.
Hi, this is Mark from Innsbrucken for Rabobank. Thank you very much. I thought it was very insightful, inspiring, and also points out to a lot of challenges. One of the things you mentioned at the opening was also, let's say, is it crisis-proof, the current system? And a lot of the developments, of course, that are coming. One of the things that I've taken note of is at times we see hacks and security risks of a lot of these new developments.
Sure.
So if you look at the future, you know, IT security in that sense, and you know, how do you view and perceive that as a hurdle to the development? And what maybe you can share a little bit about how you see it and how you perceive the, I would say,
Sure.
the security risk. Thank you.
Yeah, great question. It certainly is a massive hurdle. It's a huge blocker for adoption today. It's not an easy problem to solve. And I should preface it by saying that we are pretty much in a space where we're building and driving a car at the same time. We've made tremendous progress in changing the way we can transact, businesses can transact, but we haven't thought about a lot of the risks down the line, which is what happens in case of a hack. No easy way to solve that. I think it's a matter of evolution. We have to continue to work with a number of different providers. We're hopeful that with the likes of Trustology, for example, it started off as a venture that was made by bankers for banks. And they brought in the world of traditional banking security. They understood the need for enterprise-grade IT infrastructure. And it's really about setting the right sort of expectations at the start. And I think if blockchain companies understand the confluence of the old world and the new better, and if we have a better way of gauging that, and we are cognizant of the fact that we cannot move without the right kind of security, that'll be a great first step.
So I have a novel idea, right? How about we start in the blockchain world using software development best practices, right? And really strong governance models in the code that we develop in these applications in the blockchain. So blockchain's not getting hacked. Ethereum's not getting hacked, Bitcoin's not getting hacked. It's the application layers on top of the existing chains that most of the code base sucks and is not well governed. That's my 2 cents. But we have another question.
Hi, thanks for sharing your slides. My name is Victor. I'm from Bank of America Merrill Lynch. I'm curious, you're involved in many, many projects. So I guess the question is, why don't you do one project well instead of so many projects? And how do you measure success?
Tough questions in this crowd.
No, it's a good question. It's useful to know that our audiences have that perspective. I am not 100% sure why it has to be mutually exclusive. We do what we do because there's opportunity, and we possibly don't have enough hours in the day to try and sort of work on every single opportunity that comes our way. Why do we not work on any one dimension? It's because this is not the sort of industry or not the sort of world where we see success emanating from just one side. So if you look at the way ConsenSys evolved, we evolved as a company that built core components and developer infrastructure, stuff that you and I would probably never see. But then the need for doing that was because we had to kickstart the ecosystem. You cannot have adoption in an open source world if you don't respect your developers. And for those of us who see this as a war between protocols and who's going to be the best and all of that, this was going to be won by the team that has the most developers. So almost, it's a tricky one, but it's very hard to stay out of the race and say that I'm only going to build product, or I'm only going to build core components, or I'll focus purely on token advisory. It's not possible. It is extremely hard to try and be a leader in the ecosystem and try and bootstrap the ecosystem by taking that position. But I would like to think that we do a lot of things and we do it reasonably well.
So I want to disagree with what you just said in terms of, he with the most developers wins. I think exactly the opposite. He who wins is the guys that actually solve the business problems that allow the large institutions to adopt the technology. Whether it's 5 developers or 500, that's who I think wins in this space. We have a question.
Hi, thank you very much. If we could go back to the previous slide that you showed, yeah, this one. I come with a product development background. I thought it was great that you're actually doing a lot and incubating a lot. So a slightly different view from the previous gentleman's perspective. My question is this. Is the true competition, right, and thank you very much for your foresight, is the true competition basically, right, on the blockchain rail itself? So for example, is each of these companies, right, kind of also betting on the rail that they are using, right, to be successful so that, their business can be successful as well? And, and if that's the case, which, leads to my second question, does it mean that all this data that they're using, which needs to be public, right? If I have a multi-rail browser, I could, all this data is essentially can create a new, sector whereby I have a browser and I can browse right from Trustology, custodian-based type of data, all the way to Bifrost. So 2 questions. Thank you very much.
Sure. So I'm not entirely sure I understood the first question, but let me give it a shot anyway. So all of these components, infrastructure, platforms, what are we building, very much are in the Ethereum space. And we are, as a company, aligned towards making public Ethereum a reality. We believe in the mission of public blockchains, of open blockchains, and that's really what's going to power the P2P world. So yeah, very much in that space. You can scrape data off the public blockchain today. You can access every single piece of information that's stored on the Ethereum network. That's the whole idea of a public blockchain. It's a global ledger of all transactions that ever happened, right? But how can you make sense out of it, right? How can you use it in your day-to-day business? What difference does it make to you if that data is a wallet address with a transaction balance? That's the key question. And that's precisely why we launched Alethio, because businesses, regulators, people launching tokens, people using tokens need to know what's going on in this world around us, right? If blockchain becomes mainstream and it eventually seeps into the core fabric of what we are today and becomes like TCP/IP, you probably won't even know it when you open up your browser. But it is possible in the future to exploit that data, to use it in different ways.
Thank you. I have a question about the Bank of International Settlements just released a report last week on the blockchain. And in the report, it referred to the idea of the so-called permissioned crypto payments that they used Ethereum. Yeah. Previously, they were trying to use some sort of permissionless, but it turned out that it was very slow and it was really not very efficient. So do you think, since the regulators are actually promoting these areas, so these low-hanging fruits would actually fly faster earlier than the other areas that you are trying to develop. So can you, yeah, thank you very much.
I certainly think so, yeah. And a lot of the POCs, a lot of the initiatives we're seeing right now start off as permissioned. But they all, because we're on Ethereum, it's quite easy to port them with a tether to the mainnet eventually and make that ready for public. We don't really mind the fact that something starts off as private or permission. There's nothing wrong with that. It's a great way to sandbox something, to experiment and try and find out where you can go, when you eventually go public. Granted, mainstream Ethereum is not ready for scalability and for speed of transactions. We will eventually get there, but it's a great first step when banks, central banks, and that's why I love the idea of Ubin. What the MAS has done for the world of central banks and blockchain is astounding. It is going to reverberate for the next decade or so, because it's making a lot of the change. It's adding a lot of the catalysis that other banks, other regulators needed to basically say, yeah, maybe we can experiment. Maybe we can do something in a private blockchain and try and learn from that.
Okay, so we have, I'm going to get to your question, but I think we need to hit the elephant in the room, right? You're the 1,000-pound gorilla in the largest blockchain company in the world, right? Ethereum, right? We all know Ethereum is great, except when CryptoKitties launches and completely clogs the network and brings transactions to a halt. It gets expensive, but you've built, I don't know, 40, 50, 60 companies on the Ethereum network, where it has, just by fundamental design of the Ethereum network, it has significant limitations in scalability. So how are you addressing actual scalability on-chain for the Ethereum network?
We're not necessarily worried about that, to be honest. I think the foundation is doing great work in terms of advancing concepts like state channels, side chains, quadratic sharding, and the next ConsenSys algorithm, which is moving from proof of work to proof of stake. So we're not overly worried about the state of scale right now. It's a problem that we're solving in bits and pieces. Coca, for example, was a great way of solving scale and speed in a very private environment by using some cutting-edge concepts like bullet proofs and range proofs, which are very recent to the world of cryptography. To your point about CryptoKitties, there's an example that I can sort of, in 1999, Victoria's Secret live streamed one of their catwalks, one of their runway programs. It crashed the internet, and it completely stopped people from accessing their emails, and things that just went completely haywire. That was a good thing, because we learned from that. The code hardened. The network learned to cope with that sort of volume. So again, if you were to judge the present state of Ethereum through a flash in the pan event like CryptoKitties, which is fantastic, by the way, if you like cats, but I think it's going to be misguiding, and the real lesson that we get from what happened with the CryptoKitties example is, well, we've got to manage a problem. It surfaced a problem, and it is going to help test the code. It's going to help harden the code.
So is ConsenSys looking at other protocols besides Ethereum that actually address the actual design limitations of scale, throughput, with decentralization and still security?
We are closely watching a number of different protocols. I won't say which ones, but are we actively planning on deploying, working, or any of the 1,000 people interested in pursuing a different direction? The answer is no. We've had a steady stream of recruits joining us from a lot of other protocols, lots of other different companies, pretty senior folks as well, who completely believe in the value of an ecosystem that is built open source by developers with all of the tools available and the kind of head start that we have in the Ethereum world. So the answer is no.
Okay, Stefano Priola from Banca Sella. On the same topic, I saw token backed to fiat, but I saw them more an evolution than a revolution. We have seen with USD, Tether, what happening in this month. So my question is, if you are not considering a strategy Lightning Network applied to implicit value tokens, more strategic than this?
I'm sorry, you'll have to repeat that for me. I didn't get your question.
The question is if you don't see Lightning Network applied to token with the implicit value, like for example Bitcoin,
Right.
more strategy than working on token backed to fiat, for example USD Tether or other attempt to exchange tokens instead of value fiat.
Right. I think your question was about how do we manage token to fiat conversion in a like Lightning Network, or
Like
in a
Lightning, which is part of Bitcoin, which
Right,
isn't
yeah.
part of Ethereum.
which is not part of Ethereum. So yeah, again, it's an evolution. We cannot judge the vast potential this technology offers. And when I say technology, I'm talking about general terms. You don't even have to consider blockchains. Think of DAGs completely different from blockchains, right? Think of what Hashgraph is doing, for example. It furthers the larger mission of decentralization, right? So how do we cope with it today? We probably have fixes for a few instances. We probably use a mix of private versus public. We probably use state channels to increase the throughput. But is there a fixed solution that's going to compete with Amex and Visa? There isn't. Will we get there? Yes, we will.
Don't ever let them see you sweat. Very good, Vinay. You got tough questions from the crowd. Big round of applause.
Thank you.
All right, so we have one more session, then we'll have a coffee and biology break. So I'd like to welcome to the stage Masafumi Kando-san from the Japan Exchange Group. Really doing some interesting things in terms of how do we actually look at securities, settlement of securities, and if we look at institutional participation within the blockchain space, all right, there's two fundamental issues. There's liquidity on both sides, and there's custodians and custodianship. So I'm really interested to hear what you guys are up to. Big round of applause. Let's get started.